A full report with Alphabet shares under pressure alongside the rest of the market. May not be because of the whiz. Tim Bigham joins us, option strategist, buy alerts, options whiz himself. Tim, good morning.
Good morning, OJ, and I'm not sure whiz is the term that many people use when describing me. It's another four-letter word, but we won't get into that here. But taking a look at Google and the rest.
Three-letter, I think it's W-I-Z, unless you put an H in there.
I'm using the old school W-H-I-Z, so yeah, absolutely.
Traditional,
traditional all the way is me, right? Yeah, doubtful there, but taking this market, I think, is kind of, in a trading range, that old, as we talked last time, big range, no change. So we saw that nice rally over the past several days, giving it all pretty much back here today, and some of these stocks even heading lower here. So I'm just taking advantage of still elevated implied volatility, certainly across the board here, and getting to be cheap valuations on some of these stocks. Finally, certainly not too long ago, most stocks were somewhat ridiculously valued. Now getting somewhat attractive here. So Google being one of those, Alphabet, certainly the cheapest of those, multi-trillion-dollar kind of cap stocks out there. Looking at PE only around 20 now, price to sales well under 6. Compare that to like Apple, which is kind of the value play, the safety play, as you alluded to today. It's up a little bit today, but Apple trading over 30 PE and still over 8 times price to sales. So I think Google at some point will get the benefit of that valuation. So I'm just going out and selling the traditional April out-of-the-money put spread here, the 150, 145 put spread. Earlier was trading just over 50 cents. Now it's trading almost at $1, given the drop in the overall market and Google. So I don't mind being a buyer of some of these stocks, but I think patience absolutely pays here with implied volatility where it is. So I am absolutely being patient and structuring with out-of-the-money put spreads kind of across the board here on the names I like. Take advantage of the recent stock weakness and the recent pop in IV. So getting a bigger cushion for my, if you will, patience.
Okay. And right now it's looking like you want as big a cushion as possible. Things falling apart. We're down almost $7, more than 4% in Alphabet, new lows for the NASDAQ futures this morning too.
Yeah, absolutely. I'm, that 150 level, we're kind of at a key level right around here. That 160 level has held in the past. But if you look back to the September of last year lows on Alphabet, this area around 150, I think it briefly traded below there before it ripped higher, is an area where, if it breaks below there, you have your, I'm out of the trade sort of moment. But until then, at least I still have another 8 points of downside, and I can continue to hedge shorter term with some out-of-the-money call spreads, take advantage of that high IV here. So I think, Google normally tends to be a lower beta name. Today getting hit, I think, because of the news on Wiz and just with the market. This might be the capitulation low beginning that we need to see here. So I'm not aggressive at all, but I think it's a trader's market. Buy the dips when they're big dips. And certainly I think sell the rips. I think that's the key going forward. The highs we saw earlier in the year, I think will be the highs for the year come December.
Okay, I like that. Fair technical analysis, I think, for sure. So sell the 150, buy the 145. Big range, no change. That's the Tim Bigham thesis right now.
I'm getting the T-shirts made. I'll send you one of those, too, to go with the other one from earlier.
I'm always on the Tim Bigham merch box.
Exactly right. I have 2 products now.
Appreciate it, Tim. Thanks for the trade.
You bet. Anytime.
All right. Selling some downside in Alphabet. So big range, no change.